her husband Keith is experiencing. I think all of us as members of Congress have taken Aviva.
Hello, everybody. Good Monday morning, afternoon, depending where you're at. Probably afternoon in most places. Really appreciate you being here. Pass this along to your friends, colleagues, family. We are growing by leaps and bounds here at Market Minds, but would really love to expand that reach. So if you could do that for us, that would be great. And if you could also give me a quick shout out to make sure you can see and hear me okay in the chat, that would be amazing. Because I am remote today, want to make sure that we are setting up perfectly and that you guys can hear and see everything, because I am going to be remote for about the next month or so. I am out in my slice of heaven, my Zen place here. Thank you guys, appreciate that. I will be out in Colorado for the next month, but working full time and bringing you Market Minds here. And the great thing is, with what you see behind me here, the floor of the S&P 500 options pit at the CBOE, I am actually dialed in live, not like on a bat phone or one of those red phones you pick up, but I am actually dialed into the brokers in there to find out what is going on. Same with the VIX pit. So you're not going to necessarily hear the rustle of the activity here, but you're going to get the same info. So what's going on? Markets are just off of their lows of the day here. S&Ps are down about 22, 23 points. Really not a big deal. But what we are seeing is volatility increase. We are seeing the VIX now up about 2 points on the day. That's about 10%. And actually, let me bring over here. There we go. Here's the VIX for you guys. And you can see up about 10% here. And if we hone in on the VIX, and this is a 6-month chart that you're seeing right here, everybody. This level right here is some resistance. And that actually goes back all the way to right here, which was back in April. So this area right here, which is about 22.5 to 23, that's a really important area for the VIX. That has been major resistance before. All right, so we'll see. What happened here at the beginning of August, this is one of those outliers. You can't really say that, boy, we saw that VIX spike up to 65 or 70. If you guys all remember, that was a pre-market print. So VIX absolutely did get elevated, but it really topped out in the high 30s, which is still extremely, extremely high. But just want to throw that out there. Also, we will be doing the wheel today. So anybody that wants to go spin the wheel at the end of the day here, you know what to do. Just put me in the chat and we will get that going. All right, so as I said, S&P's down about 21, 22 points. NASDAQ is only down 73 points, less than 0.5% today. The small caps, that's the one I've really been watching. And those of you in our rooms know that we are really watching the IWM, which is the ETF for the Russell here, waiting, and we've got alerts set to see. Oh, great response here. Excellent. For alerts set here for if this thing comes down to the 50-day moving average. So if it does, the small caps, that's really where I want to get in. And as you all may or may not know, the big rally that we saw in these small caps, that was all due, not all, but that was really led by the fact that rates had come plummeting down. Small caps do better when rates are lower. So what's happened over the, since the Fed actually cut almost 2 weeks ago, what has happened? We've actually seen rates move higher. The 10-year, which was down around 365 or so prior to the Fed announcement, now trading 4%. Okay, the market seems to be okay with it. I still think that rates are going to be coming down, which is also reflective, not just in IWM here. We've got alerts set out for TLT. Now, TLT, which you can see on the screen here, that is an ETF that kind of replicates the 20-year treasury, okay? And for those of you that understand the way treasuries work, or if you don't, I'm going to explain it right now. As the price of bonds go up, as the price of your treasuries go up, yields come down. Or as yields are going up right now, rates are going up, prices are coming down. Well, this TLT that you see on the screen here, okay, you can see the price coming down. Well, we're about to hit the 200-day moving average. That 200-day moving average here in TLT is right at about 94 quarter-ish, 94.30, not so far away from where we are right now. So I am definitely ready to pounce on that if it gets down there. Okay, one other thing I want to review, because I got a lot of questions on that this morning. Okay, what I have up here now, what you can see here now, this is the implied volatility chart in TLT. And you can see it's getting pretty expensive, right? It's getting pretty expensive. Well, let me flip this over now to Amazon. Okay, here is the implied volatility chart in Amazon. Can everybody see this? Okay, and I'm drawing kind of that yellow line across there so everybody can see kind of where that big resistance area is. Can everyone see that? Okay, good. So we put on a position this morning in Amazon. Okay, and this is ideally what we like to do with all of our positions, is combine direction with volatility. So if I look at the stock chart in Amazon, okay, here's the stock chart. You can see Amazon coming down right to these two lines here, both the red and the blue line. So there is a lot of support right below the market here. Okay, even with Amazon down 2.5% today, down like $5. Okay, the 50-day moving average is about 179.5. You've got the 200-day moving average right behind that at 177. So when I look at that and say, wow, there's a lot of support here in Amazon. Maybe not necessarily right where we are right now at 181, but just below here, okay? So what we wound up doing, as you guys know, is we sold this put spread. Okay, we sold this put spread this morning. Rather than buying a call spread, rather than paying money and dishing out a debit, we collected money to get a bullish trade. And that was because of implied volatility. So what we're doing is combining a trade where we wanted long deltas, so a move perhaps back to the upside, with a trade where volatility was really expensive. Okay? So we sold this thing this morning for $2.20. Now the stock wasn't that much lower than where it is right now when we got in. Okay? So volatility has come in a little bit. But again, that's what we look for, folks, when we can combine together directional play with what volatility or premium is doing, extrinsic value. That to me is where we really are a step ahead and where we really stand, to potentially make a nice profit. Does that make sense to everybody? Again, if you have not put your name up here, I see, 15, 20 names or so. If you have not put your name up here for the wheel spin, please just put me if you haven't already. Okay, now let's talk about the October effect. Okay, and the October effect is, I don't want to say it's an anomaly, but it is something that happens in the marketplace, or something that people believe happens in the marketplace, okay, during October. And I don't want to say it started back in 87 with the 87 crash, okay, but that is really kind of when this started. And ever since then, even though there have been other periods of time, okay, where there have been, and that's what everybody's thinking, right? The scary October, okay? There have been other periods of time in October where the market hasn't done so well, or where the market has just been incredibly volatile, okay? So what really is this October effect thing, okay? It's this theory that stock prices go down, okay? And the bottom line is it's actually not necessarily true. Now, if you look at the outlier moves, okay, if you look at the outlier moves, and if you focus in on the Dow, 9 of the 20 worst days in the history of the Dow, okay, 9 of the 20 largest single percentage declines in the Dow have happened in October. Okay, so number one, maybe that is part of what this October effect, and people thinking that Jeff Lake with Lonnie. Oh man, how many of you? I gotta, go off to the side here for a second. How many of you ever watched the movie Halloween? Right, came out in the 70s. I don't know, I was 10, 12 when that thing first came out, and yeah, I was scared to death about that movie. That's what people think about the market. That's what people think about the market. Okay, Zora, you've got to watch Halloween, unless you really don't like scary movies, because to me it was really scary. Now, beyond this in the Dow, where 9 of the 20 worst percentage day declines have happened in October, okay, since 1928, okay, so right before the Big Depression, since 1928, we're looking at 100 years basically, 96 years, okay, the S&P 500, guess what? S&P 500 has gained value in October more times than it has declined. And overall, Okay? There is a slight gain in October for the last 100 years in the market in the S&P 500. Okay? Now, what is absolutely true? What is absolutely true is this. Okay? This is a chart of the VIX here. This is a 2-year chart, but if we were able to plot this, maybe I can pull that up while I'm speaking here. If we were able to plot this in the history of the VIX, we would see that October is the most volatile month of the year. In fact, if you want more statistics, it is 35% more volatile than the average over the rest of the year. Okay, so yes, there is some nervousness in the market. There is volatility. What does that mean for us? That means usually there's really, really good trade. Okay, now, does anybody know what those big events in October, which have happened over time, which has really kind of led to the belief of this October effect? There's 4 of them. I mentioned one of them, which really is the most recent one, okay, which was 87. Actually, it's not the most recent, but maybe the one that everybody remembers the most, okay? So what are some other big, massive events that have happened in October? Okay, so Black Monday, Guillermo, that was the October 87. That's the 1987 event. I'm going to go chronological here. So there's really 4 of them. Okay, Don, excellent. 2008 financial crisis. Yep. And I remember I was trading in the S&P 500 pit at the CBOE right here. When I was vice president of Goldman Sachs, I was trading for Goldman Sachs at the time. And yeah, that was pretty intense. That was pretty intense. Okay, so going back in time, again, I'm going to do this chronologically. So Black Monday, which was 1987. Okay, now how about before that? Got to go way back. Got to go way back before that. What could have happened? We just kind of talked about it a little bit. No, it actually wasn't. That oil crisis was 73. Don, that's when Israel got invaded, the Yom Kippur Day War, and that was October, but that was not really one of these top 4 big declines. There you go, Robert. Yes, the 1929 market crash. And then one before that, yep, and that led to the Depression, Leaf, yep. And then before that, and I actually wouldn't have known this if I didn't, do my research on it. But apparently, there was a massive, massive panic back in 1907. So these are the 4 things that stand out that really lead to this October effect that everybody thinks that, oh man, this is really gonna be a bad month. And if you think about it, how much do we all trade and how much does everybody trade, especially retail traders, on psychology? Right? So human psychology, definitely contributes to big moves in the market. Okay? And when that happens, okay, when you start to see that panic selling, and we kind of saw this 2 months ago at the beginning of August, kind of saw this a little bit. Okay, what happens? The herd instinct, right? The herd instinct. Once that snowball starts rolling, it gets bigger and bigger and bigger and bigger and bigger because now everybody's got to pile onto it. A lot of emotion. You got it, Zora. That is absolutely right. And if you don't know what herd instinct is, it's really it's like the FOMO, or a compulsion to follow along with the crowd. Okay, it kind of leads people on the upside too, right? When everybody's piling in and buying on the upside too, same thing. It's kind of that theory of when you hear your cab driver or your Uber driver talking about Bitcoin, when Bitcoin was at its highs. That's typically the time that's a sign where, oh boy, things are getting really overbought. And the same can be said on the downside. Same can be said on the downside, which is kind of why you're here and kind of why you're following myself and Mike and Charlie, Mike Patton, because we're professionals that have been through this. And yes, even though our emotions can get involved also, we keep them in check because we know we don't know the outcomes, but we know what we really need to do when something happens like this. Okay, so let me go back to some statistics here I'll put the charts back up here. Hi, Bear. So over that 100 years or 96 years, okay, in October, we've had gains 56 times, losses 40 times. That's pretty darn good. That's pretty darn good. Okay, the average over the last 100 years, the average gain in October is 0.5%. I think if right now someone asked you and said, would you lock in right now for the rest of this month, the market to be up 0.5%? Is there anybody here that would say, nah, I don't want that, I'll roll the dice? I would venture to say that almost 100% of you would say you would want to lock that in. I probably would. Okay, would any of you not? So here's some more stats to add on. Okay, when the S&P rose in October, so those 56 times, I'm with you, John. If someone said not just the end of October, but if someone said December 31st, we're going to end right here, wrap it up, yeah, I'm with you. I agree. I think everybody would be very, very happy with that. So the 56 times that October has gained, those gains have been 4.2%. The 40 times that the S&P has lost, those losses were 4.6%. Those are huge, volatile moves. We typically don't see averages like that in other months of the year. These are outliers. These are absolute outliers. And that is why October is so volatile. Okay, they are so volatile. Okay, any questions on this? Because I want to go one step further, something that people may not love. Okay, any questions on the October effect here? Thank you, Oscar. Thank you, Motown Guy. Again, if anybody here has not put in the chat me because you want to be on the wheel spin, please do it now. Okay, if you've already done it, you're in. If you haven't, put it in now. Okay, now, what is different about this October? What is different about this October? Well, in less than 1 month, and I'm putting this in big, bold letters here. Yeah, we have a presidential election. A presidential election. Does that really matter for October? Yes, it does. The answer is yes, it does. Okay? Now, in all of those stats I put up on the board before, where we saw the average over all Octobers being up about 0.5%. It was a little over, I think it was 0.52. Okay? If we remove the election years, the average October gain is actually plus 0.7%. So simple math would tell us that when it is a presidential election year, that means we got to get from 0.7 down to 0.52. Those stats aren't very good. They're not horrendous, but they're not very good. So in presidential election years, the average October is negative 0.8%. And that's since 1950. So we're looking at, 75 years basically. Okay? So what do we expect here for this October? Just because this is the average, and we always know that past performance is not necessarily indicative of future results. What should we expect? Well, what we should expect is the unexpected, because this year has been a year of unexpected events. We don't have to go much further back than the month of September to know that September, which is the worst performing month of the year in the markets, was actually gangbusters for the market this year. So patterns that we have seen over time this year especially have not necessarily held. Okay, so what's different? I mean, yes, we have the election. Well, the Fed just cut by 50 bips. Now, with the eco data being so strong over the last week or so, especially that jobs data, and we are going to get CPI and PPI later this week, now the market is pricing in zero possibility of a 50 basis point cut in November and only a 90% possibility of a 25 basis point cut. There's actually a little bit of a probability here, and that's changed a little bit here. Here we go. Now, there is a 17.5% probability of no cut at all in November. It was literally last week, 100% probability. It was just a question whether it was going to be 25 or 50 basis points, 50-50. Now, 17% no cut at all, 83% that it's going to be a quarter point cut. So that's number one. That's the first thing, that is different or an outlier for this October. We have seen much better eco data, especially that big blowout jobs report that we saw on Friday. Okay, so, we've got these things ahead of the election here where the market can really react any potential way. Okay, now, for some good news, for some good statistics here, okay, we'll end on that before we go to the wheel. Okay, for the full year presidential elections, okay, full year presidential elections, the market has gained, S&P has gained almost 7%. Now, we wouldn't want that to happen this year because we're already up on, just about 20%. So we wouldn't want that to happen. But when the S&P has risen in January, which it did this year, that goes up to 15.6%. Definitely a little bit more optimistic. Okay? And This is the big one, guys. As bad as October in election years has been, and this is why my glass is half full. That's why I always want to leave you guys with something positive. Okay? When there has been a positive September in an election year, which we had, okay, October has ended higher 78% of the time. I like those odds. I'm an odds guy. I'm a probability statistics guy. I like those odds. Who's with me on that? So the takeaway from all this is all of this info is really nice. I love it. I'm an economics junkie, so I love all this stuff. Bottom line is what I see is a really, really good opportunity to trade. All right, guys. Guess what? Here it is. Thanks, Gus. Here it is. Are we ready? Let's get countdown. 3, 2, 1. Let's spin that wheel. Who do we have today? Oh, it's the Black Lion. Mark Diggs, you almost won again. We don't need no stinking badges, Oscar. The Black Lion. Oh, John, welcome to the business, right? Welcome to the business. I don't know who you are, Black Lion. So what you need to do is email us right there at prosperswag@prospertrading.com. Give us your name, your mailing address, and the size that you wear, and maybe, just maybe, you'll get one of these pullovers that I'm wearing right here. Thank you, Black Lion. Make sure you get that email to us. And everybody, thank you, thank you, thank you. I appreciate you being here. We'll be right back here tomorrow as well. And don't forget to send in any ideas of things that you may want to talk about. All right? Appreciate all of you. Give us a thumbs up. Hit that thumbs up, that like button, whatever it is. Your size is tent. Well, we'll see what we have, but just send me an email with your info. All right? Hit that like button, hit that thumbs up, tell everybody about our Market Minds midday streams, and we'll see you tomorrow, everybody. Take care.